Markets are back in rally mode today, with optimism rising as confidence in the Trump administration gains momentum. While equities push higher, the US dollar is taking a hit, giving a lift to other major currencies. And across the pond, the British pound is on a tear after UK inflation numbers came in hotter than expected. I'm Johanna Bota, and with us to break it all down is Forex.com's financial analyst, Razan Hilal. Welcome, Razan. So, risk appetite seems to be back, and major indices are pushing higher on renewed optimism. Can you tell us a little bit more about that?
Yes, definitely. So we can see a notable bullish momentum across the US indices despite the credit downgrade and despite the soft US economic data. So we can see notable weakness on the US dollar, but the US indices are still holding in bullish territory. And translating that from a technical perspective, they're holding above the neckline of their respective double top patterns that they formed between December 2024 and February 2025, which led to the whole sell off across 2025. So now that we are above that critical neckline, it seems that we are back in bullish territory, and it's notably led by the AI boom and the AI appetite into the markets, especially after the latest AI deals between the US and the Gulf region, reigniting that risk sentiment across the markets again. And we can see the main in the lead is Nasdaq near the 21,500 mark. If we're gonna jump above that level, then that can push also the S&P and the Dow back towards their 2025 records, and Nasdaq can proceed to its 2025 records, and of course beyond, setting that bullish long-term bullish track back on track.
Okay, and so what's going on with the dollar then? Because this morning the dollar index is back below 100 as several Fed officials have expressed concerns regarding the economy outlook. So talk to me about what we're seeing there.
Yes, so with respect to the US dollar index, we had a notable inverted head and shoulders pattern reaching its target, and then we dropped back down given the latest credit downgrade and the soft economic data and the economic concerns overall on the economy. So now the US dollar is actually it's on a golden 618 retracement of that overall rebound from the 2025 low extreme. So we can actually continue from there. As long as we're holding above that 2025 extreme, we have a potential to turn back around to the positive side. But if the dollar is going to hold back and extend its hold below the 100 mark, then that can give way for the euro and major currencies and the precious metals as well to reach out to their 2025 highs and possibly beyond as well.
So let's talk about the pound now. It just broke a key resistance level and it's now at its highest in 3 years. How high can we expect the pound to go?
Yes, so looking at the pound, it currently has a strong and bullish profile. So we have a bit of discrepancy between soft US economic data and stronger than expected UK data between growth and the latest inflation figures going back to levels last seen in approximately 1 year. So that is leaving the rate cut to the side and pushing the British pound to those extreme levels. So we need a clean hold, not just a wick and a reversal back below the 134.40 zone, a clean hold above that zone can possibly extend the British pound back towards the 2021 extreme. So we're talking about the 135 and the 140 levels, which is a similar scenario we're also seeing on the euro dollar chart as well. If we're going to hold below the 134, then that's a challenge. For the pound to possibly retrace before getting back on track to those 2021 extremes.
Thank you, Razan. And thank you for watching. For more financial content like this, please like and subscribe to our channel. See you later.